Welcome to the Divorce and Your Money podcast. I'm your host, Sean Lehman. I'm an MBA and certified divorce financial analyst and author of the book, Divorce and Your Money, the No-Nonsense Guide. My mission is to help you make smart financial decisions during one of the most difficult periods in your life. You can visit our website, divorceandyourmoney.com, or email me at Sean, that's SHAWN, at divorceandyourmoney.com. In today's episode, we're discussing what happens to your mortgage during divorce. You know that you need to do what you're going to do with the house is one of the biggest decisions in divorce. The house is generally one of the largest financial assets you have, and therefore also one of the most controversial and complex. And I want to approach this podcast on the mortgage from a simplicity standpoint. We're going to talk about the important financial issues involved. And we've talked about houses in previous podcasts and what to do with the house and your options. So be sure to listen to some of the previous episodes to get a good feel and a good overview in terms of what you should do with the house. But today we're going to focus specifically on the mortgage, and it's important to know your options before you make a decision. When I say your options, I mean three things. You can sell the house, pay off the mortgage. You can have one spouse take over the mortgage. That's option number 2. And option number 3 is you can both keep the house. And then we're going to have a special section on something called a quitclaim deed that you should be aware of. So let's start with the first option, which is selling the house. And it's one of the cleanest options you can have financially. And when I talk about financial issues, remember, I come from a perspective where I don't want you to take emotions into the equation. It's a hard thing to remove. Divorce is unquestionably a very emotional process. But when I talk financial decisions, I want you to be rational about the financial decisions. So I come from this without emotion, and I want you to look at these things without emotion as well. So one option, of course, is to sell the house. And from a financial perspective, it's a very clean option. You sell the house, pay off the mortgage, and that is basically what you do. You split the rest of the proceeds and call it a day. And it's important to know that if you're going to sell the house as part of the divorce process, it's best to do it most of the time when you're still married, because you can save an extra $250,000 in potential capital gains tax liability. So if you sell your primary residence, we're talking your primary house. We're not talking vacation homes in this. We're talking the main house where you live that you use for tax purposes and might be your main home. Well, if you sell your main house, the tax laws are written so that you get to save up to $500,000 in capital gains tax. That's the appreciation of the house over time when you sell the house. But if you are single, you only get $250,000 of exemption from a capital gains tax. Now, I explain the details of this in previous episodes, so you should go refer to those if you don't know exactly what I'm talking about. But the important thing to remember is it is better for you, could be substantially better for you to sell the house while you are still married, because otherwise you'll end up with a much larger tax bill and therefore a lot less money when you actually get divorced. And that is not what you want to do. Now, option number 2 is where one spouse keeps the house. Now, this is an important option to understand because it's often the most common one. You know, it's a highly common option where one spouse really wants to keep the house. Oftentimes it's the spouse with the kids. It could be any number of reasons, but one person keeps the house. And the first thing to understand is if you're the one who's keeping the house, there's some very important stuff to know. And of course, the first is make sure you can afford the house financially. Have you done the math? Can you afford the house payments, the mortgage payments? And you need to understand and know that you can, on a monthly basis for several years down the line, be able to pay just to stay in the house. If you haven't done that, then you are getting yourself in potentially a world of trouble. Now, when it comes to the mortgage, there's something very important that comes along with keeping the house. If you are the sole owner of the house, your spouse will need to, or you rather, will need to refinance the mortgage. And what does that mean? It means that your name only is going to be on the mortgage if you're the only one keeping the house. At least it should be that way, because it's going to be your sole responsibility. And if you're going to refinance the mortgage, you need to understand the way that works. Because let's say you win the house or you receive the house in the event of a divorce. Well, your ex-spouse is going to say, well, I'm no longer liable for the house and therefore no longer liable for the mortgage, which is very important. And so they want their names removed from the mortgage. Now, if you're going to be the one taking the house, here's what you need to be aware of. You're going to need to remove your spouse's name from the mortgage. You can't just take their name off the mortgage and call it a day. Unfortunately, almost in all cases, you will have to refinance the mortgage, which means you're going to have to go to a bank or set of banks, and they're going to look at your income, they're going to look at your credit report, and they're going to have to basically create a new mortgage just for you. And they're going to just take your circumstances into consideration, not the case where it's both you and your spouse anymore. So when you refinance the mortgage, it's like getting a new mortgage and paying off the old one. That's the way to think about it. And when you get that new mortgage, you need to be really aware that the terms for that new mortgage could be very different than what you had before. You could have a higher interest rate. You could have a different payment structure. There's a lot of things that could be very different if you refinance the mortgage. And so you need to be aware of those things. And you could even be in a terrible case where you don't qualify to refinance the mortgage. You need to be really aware of that as you go through the divorce process to make sure that you're not in a position that you didn't anticipate being in, and you're not in a position where you're overly burdened because you have to deal with this mortgage. And you also need to know that the opposite case is true if you're the one who's getting rid of the house, that your ex-spouse is going to have to refinance the mortgage as a single person. And, the important thing for you, of course, is that you remove your name from the mortgage, but you also need to be aware that they could be in a situation where they can't refinance the mortgage or your name has to stay on the mortgage for whatever reason. And so you need to work these things out before the divorce is finalized so you know what to expect. So it's a very tricky thing, and you need to be aware of what it takes to refinance a mortgage as a newly divorced person, so you aren't surprised later. And then, the third option is to pursue other options, basically. That could mean you both keep the house and you rent it out. That's an option that you could pursue. Now, there's also something, we didn't really talk about this case, and I don't want to go through it in too much depth on this episode, but there's something called a short sale. And that's the case when your house is underwater, where your mortgage is more expensive than the house itself. And if the mortgage is larger than the house, you can enter into a short sale where you sell the house and the lender, the person who owns the mortgage, the bank, usually will say, you know what, we'll just wipe the slate clean, just give us all the proceeds from the house sale. Now, that's an option in some cases. The caveat to that is that your credit score could get hurt substantially from pursuing that option. So you need to be aware of it. And the other option under the pursue other options category is you could theoretically both stay in the house and continue living there, although as a divorced couple. It does happen from time to time out of necessity. It's just not the ideal option. And then I said we're going to discuss a special topic, what I call the quitclaim deed, or not what I call, but what the industry calls a quitclaim deed. And it's a way to transfer your interest in the home to another person. And you might have to sign one, or you might be the one enforcing one. But the important thing to understand is if you have to deal with a quitclaim deed, you need to know what's going to happen to the mortgage before you sign off on this quitclaim deed. And what do I mean? If you have a quitclaim deed and you're going to say, you know what, I'm going to give my soon-to-be ex-spouse full interest in the house, but your name is still on the mortgage, you could be in a situation where you are still responsible for the mortgage payments, but you have no ownership in the house. And that is a lose-lose situation. So you need to be aware of what you're signing and what the implications are, and really know what's happening to the mortgage before you sign the dotted line and transfer your ownership stake over. So be very careful if you have to sign or you're asked to sign one of those quitclaim deeds. So those are the three options with the mortgage. You can sell the house, pay it off. One spouse keeps the house and they have to refinance the mortgage. And then there's the pursue other options category. And I want to make sure that you're aware of all of those options as you think about what's going to happen to your house and to your mortgage. That's it for today's episode, but before you go, I want to make sure that you don't miss a few important things. First is my book, Divorce and Your Money, The No-Nonsense Guide. It's available on Amazon. It's a great resource to help you with the myriad of financial issues that occur during divorce. We also offer personalized one-on-one coaching services where we can discuss whatever pressing financial issue you have directly with me. We can go through the options with the house just to split it, or we can go through how to refinance a mortgage, or whatever is most relevant to you and your situation. Those are easy hours to book. You just go to the Divorce and Your Money website and you click on the coaching tab and you will be able to get a session with me. And in some cases, we do it by phone, sometimes online, and other times in person, just depending upon where you are, what your needs are, and how big the case is. Also, stay in touch with us at divorceandyourmoney.com. Be sure to sign up for our newsletter, which gives you extra information that's not necessarily on the podcast and will keep you updated on anything that you may have missed. And of course, you can email me with questions. My email is Shawn, that's SHAWN, at divorceandyourmoney.com. And if you enjoyed this episode, please subscribe on iTunes or your favorite podcast player and leave a 5-star review. Pretty please. Not 2 stars, not 4 stars, but 5 stars, which allows other people to discover the podcast. And please share it with a friend. Word of mouth is the most powerful way to help others. I'm your host, Shawn Lehman. I'm an MBA and certified divorce financial analyst. Thank you for listening.
I'm on top of the world, now I'm living, and the good just gets better, keeps on giving. Not even close to the end, it's just beginning.